All right, sharp on 11, let's get started. Um, Good morning, everyone, and welcome to the monthly new features webinar for October. Just a couple of housekeeping matters before we get started. Today's session is being recorded, so all those who registered for today's webinar will receive an email with the link to the video, as well as it'll also have attached a copy of the slides. At any point, if you do have any questions, I've got a few colleagues logged in who are in fact the subject matter experts in these sort of features I'm going to be showing you. So feel free to ask questions as we go through. They'll be more than happy to answer the questions as they come. And if there's anything left over at the end, both Aaron and I will endeavor to answer those at the end. Okay, so my name is Anthony Fernandez. I'm one of the product managers in the Simple Fund 360 team, and I'll be providing the BGL update. And we've also got joining us the CEO and co-founder of Smarter SMSF, Aaron Dunn, who'll be providing a SMSF update to all of you as well. So welcome, Aaron.
Thank you, Anthony, and welcome everyone to today's session. We've had a topic today we're going to talk about that has been hanging around for a long time, and we have seen in the past week or two the release of some draft regulations around legacy pensions. And I am old enough to know these, and I'm sure there are some people old enough on here to understand them. Some may not know what I'm talking about, but I'm going to share some insights because there is a lot of activity going on about these at the moment, and some potential steps you'll be able to take.
Looking forward to it. Sounds good. So at any point, if you have any questions, just type it into the Q&A window, and the guys will endeavor to answer those. Okay, so what we're going to cover is the features and improvements that were introduced as part of the 12th September update that went out. And just so that you're aware, we have another update coming out on Thursday, which is the 3rd of October. A lot to get through, so I'm just going to jump straight into it. And the first one off the block is the new fund wind-up wizard. For those of you that have processed wind-ups previously, you can imagine the various screens you had to jump in and out of. You had to make sure that you followed that help article, to the T, because if not, you'd have, for example, the rollover transactions sometimes duplicated. Let's just say a lot of the queries that have come through on support has surrounded the whole wind-up process. And it's based on that feedback that we've essentially brought you this new wind-up wizard. Without further ado, let's jump straight into it. So this wind-up wizard is located under the compliance menu, so that's where you'd find it. And it's the last tab along. As soon as you go into this screen, it'll have a button saying Start Wind-Up Process. It'll automatically identify which financial year the fund is in as well, and effectively start the whole process of winding up a fund. Click Wind Up. And then on the left-hand panel, you'll notice that there are 6 steps effectively that need to be completed in order to ensure that you've done all the relevant things required to process that wind up. So step 1 is you have to first make sure that you've got all your transactions entered up to the wind up date. We've given you a link to the trial balance as well. So this will effectively link off to the Smart Reports trial balance screen. The whole idea of that was give you a quick idea of to check if there's any amount sitting in your clearing accounts. And if so, just to make sure that you move those to the relevant accounts. If you've got any investments that need to be disposed prior to the whole wind-up process, those are things you'd want to check to make sure that the fund is in fact ready to be wound up. I'm gonna select 24th of June 2024 as my wind-up date. Now, this is, if you've got this date already input to the fund details screen, it will bring that date through onto the screen as well, as in both fields will effectively share the same data. Hit tab, and effectively it's going to do some validation checks for you. So the scenario that I've got here is I've got a pension fund, and the whole idea is we're going to wind up this SMSF and roll over that money to an industry fund. So that's a sort of scenario I want you to keep in mind. And what it has initially identified is you've got investments that currently are on hand. Maybe you need to dispose them. Maybe it's, I don't know, an in-specie transfer of sorts. It's just sort of validations that we will identify. You've also got a pension member here whose minimum pension hasn't been paid. So for example, the system's calculated that this is in fact the minimum pension that you should be taking. You've only paid out this. You still have to pay out 1960 in order to comply with the minimum requirements. We've given you a sort of option here to just effectively post it directly from this screen so that again that you're not really jumping out to a different screen to process that pension payment. Hit post, and you can select as to what the contra entry is as well. So minimum pension sorted, it'll check to make sure given that it's a pension fund, whether you've got an actuary certificate input as well, or a actuary's percentage rather. So it'll do those checks for you. I'm just going to ignore this disposal. I'm going to go, yep, mark as completed manually, just so that, as you can see, it's got that green tick against step 1. Step 2 is to check if, for example, the fund has tax effect accounting. So if it's got switched on, you can actually just switch it off by ticking the box there. I don't have any amount sitting under the 890 account, so therefore I don't have to do a manual write back. However, if you do have tax effect accounting switched on and you have a balance sitting in the 890 account, you need to do that manual write back. We're making improvements in the next 2 to 3 releases that we're looking to automate a lot of those functionalities. But for the moment, if you've got tax effect accounting switched on, just be mindful to switch that off. The third step is to do the create entries up to the wind up date. So what I'll do is I'll hit create entries. So you can actually create entries from this screen, which effectively does the create entries in the create entry screen, and it'll bring through some of the settings through to here as well. Just one thing to note, if you want to use the profit allocation worksheet prior to creating entries, you'll need to go to the create entry screen to do that. You can't really bring up the profit allocation screen through the wizard. But yeah, otherwise, if it's simple create entries, you can do it from this screen. If you've got any create entries alerts, it will indicate it here. However, to view those alerts, you'll need to jump across to the create entry screen. But assuming it's a straightforward create entries and you have no dramas with what's been processed, you can just simply go through to step 4. Now, step 4 is effectively the where you look at the superstream transaction. So we are rolling out this money through to another super fund. And as such, we need to complete the superstream rollover transactional data as well. As part of the create entries, it will also identify the estimated tax payable, because that's the amount you'd ideally want to have in your bank account once you paid out the member to pay that tax liability. You've got links through to the various financial reports as well. Again, this is just a smart report screen that it'll link off to, just so that you can have a look at what the create entries has effectively done. Okay, so to add, so let's say we've got these 3 member accounts that we need to roll over to the new super fund. If I click on add, what it'll do is, again, it'll initiate the rollover on the SuperStream dashboard. All these amounts have come from the create entries. Let me try the next member. Okay, so what it'll do is it'll create that particular SuperStream transaction. If I click on rollout transaction prepared, what it'll do is it'll open the SuperStream dashboard for me, and it'll create that rollout transaction. So as you can see, it's created the record in the SuperStream dashboard. You, however, need to go fill in the rest of the details prior to lodging that message through. So you still need to do that step. We don't automate that step as we need information to the rollout fund or the fund that's rolling in this money. And effectively, you go through doing that for the rest of the transactions that need, or rest of the member balances that need to be rolled out. And as you can see, it'll say status as in progress. It's not complete until you've lodged that SuperStream message as well. Step 5 gives you an idea of what your bank balance is. So ideally, as I said, once you made the SuperStream payments, the only remaining should ideally be your tax liability, and you need to be looking to have a zero balance once you've lodged your final tax return and the ATO has cancelled the ABN. You'd expect that balance to be zero. It's sort of a spot that you can come sort of manage all those balances here as well. Just one thing with the open up the transaction screen. So what the create entries did was it created these 460 transactions for you. So these are the rollout transactions. Just one thing to be mindful of is you need to come in here and check the type of payment, because that's relevant for your T-bar entry lodgements. So once you're happy with the rollover type, because that's important for the event type for T-bar. But yeah, effectively you need to come in here, have a look at those transactions and confirm them, because as part of step 6 is it will do a validation just to make sure that you've prepared those T-bar events as well. So as you can see, it says lodge status is not even initiated. So that was one of the events that needs to be initiated. But we do a check for the T-bar statuses, as well as have the member accounts been properly closed off. Final balances are zero, so we can just simply go here, close all member accounts, and that'll just put the wind up date on across all those member accounts. And effectively, the last stage of that whole process is to validate and lodge the final tax return. So effectively, that's in a nutshell the various steps you need to go through. Idea was to bring it or collate it all together into one screen to help with that whole workflow, especially for those accountants or users that don't do wind-ups as frequently as you do any other process, for example. So hopefully this helps. If you need to provide us feedback once you start working through this, please use the provide feedback button or option here to provide that feedback so that we can make any improvements, or tell us what we're doing well, tell us what improvements we could make to make it much more easier to process these wind-ups through. But yeah, this is effectively that wind-up process in a nutshell.
So Anthony, can I just add a couple of comments here, because I think this is great, because it's an example of an area that if you don't do it very often, you need to understand what's involved in that process. So, so this is fantastic, because it allows you to kind of work through all the mechanical bits within the administration of a fund to wind up. The other two things I'd say to those that don't do it that often is to remember that the ATO now has a publication around winding up a fund. So it would, if you're wanting to help educate your client around the steps that need to occur, or wanting to sort of get that understanding yourself, go and have a look at that ATO publication. They've updated a number of those in recent times. And then, of course, always go back to your trust deed, because the trust deed also will step out, these are the things that we actually need to do around that wind-up process as well. So I think just for that sort of completeness, those couple of other things there are really important. But I look at this and I go, that's fantastic, because it just makes sure that if I've got a pension, I need to make sure these steps are done, or if I'm in accumulation, or if I'm rolling money over, if I'm taking lump sums. There are a number of things that the technology will pick up to make sure that we're not missing any of those steps as we work through that wind-up process.
No, thanks a lot, Aaron. Appreciate that input. Okay, so the next one is to do with the trust income schedule. So we now allow for a CSV imports. Just to give it some context, so the trust income schedule gets automatically generated for you. So it's, again, I'm under the compliance menu, tax compliance, and I'm looking for the trust income schedule. So from the 2024 year onwards, as long as you've got the data entered within the ledger, the create entries process will automatically create this trust income schedule for you. However, we did receive feedback from clients that wanted to add their own custom schedules as well, in addition to the ones that we created. So a couple of sprints back, or a few sprints back, we added the ability to add your own custom schedules as well. However, when you add a custom schedule, you had to input that data on screen manually. Uh, let's just say we got further feedback going. Look, because you know how accountants love CSV files, can I just input that information into a CSV file and upload the CSV where you then create the multiple schedules per the CSV file, which is what we've done. So you can effectively download now a CSV file, enter all the distribution data into that CSV file, upload the document, and we will then automate the creation of these distributions for you. So just to show you, that's how you get the template. And once you've completed the template, that's how you upload it using the import CSV. Okay, the next one is to do with investment income generation. Okay, so this is effectively, think of it as your distribution reconciliation or the dividend reconciliation reports that you currently have through the report screen. But this is more of a UI-based approach. You're going under accounting, investment income generation. What this screen effectively is doing is it's looking at the data that we receive from the ASX as well as the UUT data that we receive, because that has income details. So we get per unit income information. We multiply that by the units on hand to determine potentially the income you should be receiving for each of these investments that you've got on hand. If they do marry up, it'll be highlighted in green. Where it doesn't match up, it's not highlighted. If you've got feeds coming through, ideally, this should just be a check that you do to make sure everything is green. Because you have to be careful, because you can post transactions through from here as well. You just tick it on the left, hit post transactions. It'll go post that income journal for you. Just be mindful, because if you have your feeds coming in, which would potentially have those transactions coming through, you don't want to double up. So just be mindful of that. Ideally, this should just be a year-end check that you do. Everything should be green and should marry up. But if not, yeah, you have the option of posting the transactions through here as well. So that's the income generation screen. The next one I'm going to show you is the registry report. Again, wish list item. And for this, you're going under Connect, Feed Management, and under the Advanced Options and Reports, you now have Registry HIN Report. Let me quickly just open that for you. Okay, so effectively what it'll show you is across all your funds under your license, it'll show you, okay, here's the ABNs for those, for that fund. Here are the different investments it's invested in. These are the security codes. Here's the registry it falls under, and here's the HINs. So effectively, it's just an export of this information into a CSV file. Again, for the wish list item, and now you've got it there. Okay, the next improvement was to do with smart docs. So let's just say we've perfected a couple of AI models. So this is to do with reading ASIC invoices and council rate notices. So this was again released last sprint. And ideally, how you would be using this function is you can either upload those documents directly into our document screen, and the models will identify what type of document it is and effectively grab the data out of it and use it to try and match off the bank transactions. You can either do it, as I said, through the document screen, or you can email it across through to the Smart Docs email address here. So if you email the documents across as well, the engine would, or those models would still grab or identify as to what type of document it is and do the relevant, let's say, matching process. I've uploaded a couple of transactions prior to the webinar. just to show you how the matching would work. Um, if the system has done a match to the bank entry, identifying it, for example, as a ASIC document or a rates notice, the first thing you'd see is the little label here saying SD. So that Smart Docs has effectively done its match. Clicking in would effectively show you the document that it's trying to match against. So in terms of auditors, uh, you've got the source doc there as well, in addition to the data being automatically matched. And this is like, for example, your ASIC invoice as well. So those are a couple of new sort of AI models that we've released in the last sprint. And that's just going to keep increasing the more document types we start feeding into the system. And as long as we can help match off transactions for you, we'll keep improving on those models as well. Okay, next one, couple of report improvements. Feedback again from clients. The first one was to do with the property summary report, to add a setting for just properties on hand. We're going into the report screen. Property summary, you now have a setting in there for display current properties only, whereas previously if you had sort of properties that were disposed of, they would show on the report as well. Clients just wanted, look, show me just the ones that I have on hand, and this is the setting where you need to come toggle that on if you just want the current properties only. The next one was to do with the depreciation schedule. We've added a setting for that as well, to order it by purchase date. By default, we have it as alphabetical. But again, we got the feedback saying, can we do it based on purchase date? This is the trigger or the toggle that you need to come select. If you were to prepare the depreciation schedule through the depreciation screen as well, it reads off this setting. So once you set it here, no matter where you print the particular depreciation schedule from, it would be consistent across the multiple screens using this particular setting here. Okay, so next one is the integration that we've done with Macquarie. So now you can open up a Macquarie Cash Management as well as an accelerator account. When I say open, you can initiate the application. So just to take you through it, the whole idea is that you open the bank account by initiating the application through Simple Fund 360. What then happens is Macquarie will do their checks. If they're happy with, yep, we've got all the information we need, they will then activate the account at their end, which will then start sending through the transactions into Simple Fund 360. So in order to really utilize this functionality, you need to be subscribed to our bank data feeds. Because if you don't have a license for that particular, or if you don't have that license, you can't really take advantage of, let's just say, the transactions coming in overnight. But just to quickly take you through the process, you're going under, where are we going? Connect, connections, and it's the first record on the list. It's Macquarie. You click on open account. It will bring through information from effectively the fund relationship screen as well as fund details. So it will bring through what the fund name is. If you want to open an accelerator account, so that's their high interest rate account, you can sort of automate for that as well. Based on the fund relationship screen, it'll identify whether it's an individual trustee or a corporate trustee. So these not just for simple fund, but even those simple invest entities. If you can create accounts or initiate applications for individual trustee type accounts, corporate trustee, as well as individual. The only one it doesn't support at the moment is joint accounts. But for the other account types, you can trigger off the application process through Simple Fund. So in my scenario, it's an individual trustee setup in this particular fund. What you need to do, though, is you need to identify who the primary applicant is. Once you picked up as to which trustee is going to be the primary applicant, you just need to tick the checkbox, click submit, and resume via email. Once you click that button, what happens in the background is we send the pertinent information through to Macquarie, and they will validate that information for us. And if they're happy with the information we've sent through, they send us a BSB account number, which then in Simple Fund gets, so it'll create that account for you in the chart. It will also then set up the bank account under feed management. It'll have an interim status there, though it'll say sent to bank. So it won't have the status of feed operating as yet. What happens then is the primary applicant gets an email from Macquarie with a link to continue the whole application process, because there's a bit more information Macquarie needs at their end, as well as, for example, uploading, for example, a driver's license or passport just to identify the client as well. Once Macquarie's got all that information that they need at their end, they will send a message to us saying, yep, we're happy with everything. The account is now opened, and it'll change the status on the feed management screen to feed operating. So once you start transacting on that particular Macquarie account, overnight, you'll have those transactions coming through to Simple Fund 360. So that's the whole process in a nutshell. You're effectively just triggering or initiating the whole application process, but the whole idea is to then sort of automate the bank feed as well down the track once Macquarie has gone through their checks and balances. And the final one is to do with another integration that we've done with audit cover. So this is under compliance. You need to go to the audit management screen, and we've got this, again, it links off to their website. Let me just link off. So it's effectively for the trustees of the fund to give them insurance against any sort of unexpected fees that they may incur as part of a tax audit. So if they want to insure against that, something to have a look at is Audit Cover, who provide that service. If you were to go through the application process, because it has that back-end integration piece, let's just say you don't have to fill in all the information at Audit Cover's end. Any information that we have pertaining to the fund will get pulled through by Audit Cover, so that you're just putting again or inputting just the information that we don't have stored at our end. So it's just to make that whole process a bit more simpler. All right, so that's my update. I'm going to give control to Aaron. Aaron, I think you should have control to the screen. Could just check.
Yep, it says I'm now in control. So thank
Okay.
you.
Yeah.
And I guess
Thank you.
just to add to that Macquarie one, because obviously it's important to note that that could be used in that fund establishment process. So, for example, if you are using someone like Smarter SMSF to order your companies and deeds and stuff, that you can then use that integration that pushes the data back into Simple Fund 360, and then from there you can then use that data obviously then as part of the population for your Macquarie application. So a lot of that is about how do we streamline that entire establishment process as efficiently as possible. But equally, I guess, Anthony, there's nothing that says a client might have an account with someone else and they want to move to a Macquarie account, so that you can utilize that at any point in time during the life of the fund as well.
Yep, absolutely.
So, all right, well, let's get stuck into today. And I've put a little sort of party popper there on the right-hand side, because this is long overdue. And this is all around those that have legacy pensions with their clients. Now, legacy pensions, when we look at and define these are effectively pensions that were in existence in some way, shape or form prior to September 20 of 2007. So I'd be interested to find out, if people just in the Q&A, whether you have clients that either have market-linked pensions, or what are these defined benefit pensions, i.e. a lifetime complying or a life expectancy, which some of those have actually now finished that fixed term, which in some instances was 15 years. So between effectively 2019, 2020 and subsequent, we're actually getting a number of those that have actually wrapped up. Now, as I mentioned, this was something that the government had indicated in the 2021-2022 budget to provide, in essence, an amnesty period to unwind these legacy pensions. And whilst there had been support for that over time, we had waited because it was an announcement under the former government, and quite clearly this was somewhat of a surprise, but a good surprise insofar around not only the ability to convert these, but also in respect to how the reserves will work as well. So what do these regulations actually allow us to do? Now, they are draft at the moment, and literally as we're presenting this webinar, I do know that there is consultation happening with Treasury. So one of my team members, Tim Miller, is a part of that to try and get some certainty around some of the outstanding items and effectively allow for these to happen as soon as possible. These are regulations, so they're not a bill, so they don't actually have to go through two houses of parliament to be finalised. But ultimately, we have far more generous outcomes in these proposed measures than we did when it was announced in the budget in 2022. So if you have clients that have either market-linked pensions or these defined benefit income streams, these regulations are going to allow those clients to effectively cease those pensions, and then convert those to one of three things. One, to be able to commute and then purchase an account-based pension. Now, transfer balance caps are still going to be relevant in that context. Two, they would be able to retain that money in accumulation if they wanted to, so no mandated obligation to have to move that out of superannuation. Or three, if they just want to kill these things off and take that money out of super, they would also be able to do so. Now, for those that aren't necessarily aware of these, what the main characteristic that links all these things together are the fact that they are non-commutable ordinarily. So this is the big change that we are going to see that allows people to exit these, because they are introducing commutation rules that would allow for the cessation of these pensions. Now, this is not an infinite amnesty period to be able to do so. Originally, that amnesty was going to be around 2 years. They have extended that out to 5 years, and I'll talk through the importance of some of those timeframes shortly. And there's going to be no real tax impost to exit these pensions. Historically, there was maybe going to be some tax impost around how reserves were going to be transferred and how those amounts would be credited to members. In essence, what I can say to you is that if the client that is receiving that pension, the balances that were linked to that market-linked pension or those defined benefit pensions is attributed to those along with the reserves back to that member, then effectively they're going to get that payment to them without any tax. And where that money would go out to a tax dependent, again, there would be no impost of tax to that individual as well. So it is a highly, I don't want to use the word generous, never want to say the word generous when you incorporate government, but it is far greater than we had previously expected, which is fantastic. Now, the other side to these, in particular for defined benefits, is that when we have those complying type income streams, we have to factor in reserves for the purposes of mortality risks. So what happens if someone lives longer than what they were expected to, and investment risks. So how much sort of surplus do we need based upon a smoothing of investment returns over that period of time? So what the government has also done in here in respect to these reserves is we have included an exclusion from the contribution caps, again, where those reserves were supporting that pension, and we have those pension ceases and they are effectively allocated to that particular member. So as I said before, the balance would be going to that member along commutation, and then the reserves that are supporting that pension also go to that member. Then we have no incorporation of contribution caps, which currently apply to these sort of pensions. We have the concepts within fair and reasonable and the 5% allocation rules. And if you fall outside of those, then they would be, in essence, impacted by the concessional contribution cap. So that those elements in the Tax Act are being excluded from this particular process. Now, we will have clients that may have ceased these life expectancy pensions some time ago. Like I said, it could have been in the last 5 years, but they have reserves that are still linked and left in the fund because of those restrictions around the allocation rules. So those exclusions that I've spoken about already will also apply to those reserves, whether they're linked A, to that member that was in receipt of it, or a tax dependent, or B, if we don't allocate it to those relevant people, but we look at an allocation in respect to other members in the fund, well, then our fair and reasonable allocation rules remain. That is, that they must be fair and reasonably allocated to each member and interest of a member in the fund. But the 5% of the value of the fund assets would be assessed against the non-concessional cap rather than the concessional cap. So it's going to allow for much greater allocations to be done to actually help clear out these reserves as well. So to really give us an opportunity to flush these out of the system if you want to be able to do so. Now, if there are other reserves, so some instances clients may have had built up reserves for other purposes. We know the ATO don't like these reserves and haven't since they issued regulators bulletins back in 2018. They can also be unwound under these rules, but again, they will be subject to the relevant caps of non-concessional contributions, where those amounts again are above the 5% rule and again must be dealt with fair and reasonably. So I've put a link at the bottom there to that consultation with Treasury. There is naturally a little bit more water to go under the bridge. And so, as I said, Tim Miller, who works as our technical and education manager here, is literally working with Treasury around trying to get these regulations finalised. Our knowledge and history in this space is obviously, we've done a lot of work in this space, showing my age, I guess, Anthony, at that point in time, given that these were, like I said, up until 2005. But what will need to be considered if you do have clients that are impacted by these, naturally it's going to come back to, well, what does the deed say? And it's not only your current deed, but in a lot of instances, you've had deeds that have been upgraded since those rules were in place when those pensions were set. And therefore, the rules around the operation of those pensions would have carried through with the variations. So there's a little bit of work to be done around understanding what the deed may require. We may also need to look at the terms of those pension contracts that were in play, the fact that we may need for a variation to that contract to enable for the additional commutation rules to be included in that. Some of it may be more prescriptive in the deed. So again, that's where you may need a deed change to adjust for that as well. You may have clients that would have these pensions either for what were previous RBL purposes, but equally you'll have those attached to these for Social Security. So some of these pensions have either 100% or 50% asset test exemption. So understanding the impact of that asset test exemption loss, one of the questions being asked at the moment is around the impact of Centrelink if clients do decide to sort of relieve themselves of these pensions, and what sort of concessions will sit within the Social Security Act around those things. We've naturally got TSB impact. So if we're allocating to members from reserves, what impact does it have in respect to the ability to have those count towards non-concessional contributions where clients are already above the $1.9 million? Also factoring in things like Division 296 tax if we see that those laws come into effect as well, because quite clearly those allocations could then have an impact on any potential balances above $3 million. We also have our commutation requirements and transfer balance cap considerations in ceasing those defined benefits and then starting new retirement phase income streams, account-based pensions in that regard. And then finally, more broadly, some of the more general estate planning needs that those clients may need around this. So not only in respect to that member, but if that member is potentially no longer here, again, and we're stuck with some of these reserves, there may be some issues there as well. So I don't think there are that many defined benefits left. There will certainly be a range of clients that have market-linked pensions floating around, because many of those moved from those defined benefit pensions into market-linked pensions at the time. So what we're doing at Smarter SMSF is quite clearly we're looking at the existing deed, in particular around pensions and the operations of reserves in light of these regulations. We have a number of documents around these legacy pensions, market link pensions, lifetime complying pensions. So updating those templates to deal with the proposed measures to allow for commutation of those, and then also around reserve allocations where that money is being backed out and either being allocated to the member or to other fund members as part of that process. So there's a bit in there, and there's probably still a little bit more water to go under the bridge, but I do say quite confidently that this is a great outcome, and the sooner that the government sort of works through these nuances that are being put back to them, we will get regulations and then effectively allow us to get on with it and look to make those changes where it would be deemed relevant. And again, noting that we have a 5-year time frame, because for some clients where they've got that asset test exemption, they might not want to lose that in its first instance, but once you work through that advice, that maybe 2, 3, or 4 years down the track, maybe at that point in time, it would be relevant to do so as well. And then I guess just from my side of things with the Smarter SMSF update stuff, we've got a number of updates and changes we've made in our documents. One of the things with our fund member is we've made and created a new document here that also deals with children being added into funds where you've got a guardian that would need to sign those documents. Also circumstances where someone under a legal disability, where an enduring power of attorney would sign those as well. We've added our death benefit income stream pension documents. So we've split that out from our other pension documents. That is where it's non-reversionary as opposed to a reversionary pension. And we've also made some changes around the inclusion of CUROP's deed updates as part of our deed of variation documents. So whether you're updating an existing CUROP or you're updating to a CUROP, we've got both of those covered as well. And in next month, we're going to talk a little bit about some of the work that we've done with our CSV imports, not only for our company and corps, but also to do bulk deed updates as well. So, Anthony, I think that pretty much takes me through. Oh, the final thing I was going to say is we actually yesterday, as part of BGL Education Week, and this week is Simple Fund 360. So make sure if you haven't registered for these that you go along and do it. I did a session yesterday with Norman just around our Smarter SMSF courses. So if you missed it, take the opportunity to jump online and have a look at that. We have both in our both courses, both available on the BGL Learning channel. They come with a complimentary period of membership with the SMSF Association as well, and you can find out all about those in that webinar recording, along with all of the webinars as part of the BGL Education Week. So that is now it for me. I'm going backwards there, it looks like, so I better go the other way.
Aaron, thanks again for giving your time to do these presentations, and thanks for everyone who joined. And the recording will be available later this week or early next week. So yeah, I'll finish off here, and thanks for attending. Appreciate your time. Thanks. Bye.